Welcome to the deep dive. We're jumping straight in today, looking at some really interesting movements and signals across the crypto market.
Yeah, definitely. We've got a mix of sources here, news reports, some deep analytics, commentary from people actually in the industry.
It's quite a stack, and it paints a picture that's, well, it's not straightforward, is it? Different parts of the crypto world seem to be reacting differently.
Exactly. So our mission today is basically to unpack all this, pull out the really key bits of info, and help you make sense of what's driving things right now, and maybe what might be coming next, even though the overall market looks a bit down today.
Okay, let's unpack this. So, setting the scene first, one source points out the global crypto market took a hit today.
That's right. The total market cap dropped about 1.68% down to $3.39 trillion.
Okay.
And trading volume also dipped 5.27% to around $133.8 billion.
And what's interesting, that source specifically mentioned this wasn't just happening in a vacuum. It linked the crypto downturn to slides in like traditional markets, DJT, S&P 500, NASDAQ.
Yeah, exactly. The suggestion is that shakiness in those traditional indexes sort of triggered some panic or maybe just risk-off selling in crypto too.
So it highlights that connection, right? Crypto isn't totally separate from the wider financial world.
Definitely not.
Yeah.
Especially when you see bigger moves like that.
Uh,
It shows sentiment can spill over. So yeah, the headline number is red, but maybe partly because of these outside forces.
right. That definitely sets the stage, a broad dip, maybe with roots outside crypto itself. But here's where it gets interesting almost immediately. Another source throws in a curveball.
You mean the Ethereum ETFs?
Exactly. Spot Ethereum ETFs are apparently seeing some pretty hefty inflows, reportedly even outshining Bitcoin today.
Yeah, that source mentioned $240 million in daily flow, specifically into the Spot ETH ETFs.
$240 million in one day. For Ethereum ETFs, why is that specific figure and the fact it's maybe outpacing Bitcoin flows today such a notable thing?
Well, since the Bitcoin ETFs launched, especially in the US, they've just dominated the conversation, right? All the focus, the flow analysis, it's been Bitcoin, Bitcoin, Bitcoin.
Mm-hmm.
So to see the Ethereum ETFs, which are much newer on the block, pull in $240 million in a day,
Mm-hmm.
and for that number to actually beat the Bitcoin ETF flows on that particular day, that's a significant data point.
It suggests maybe a shift or broadening interest.
Could be. It might suggest, a growing appetite or maybe just capital rotating within that institutional or larger investor pool. People looking specifically at Ethereum now through that ETF wrapper kind of pushes back on the idea that it's only about Bitcoin for these players.
Okay, so that's a really clear example of the nuance, isn't it? General market dip, but strong specific flows into ETFs, suggesting focused institutional action there.
Exactly.
Now, even though Ethereum's having this moment, let's swing back to Bitcoin. Because our sources also had some pretty compelling things to say about its underlying health, its future potential.
Right. One piece pointed to data from Glassnode, the on-chain analytics firm.
Ah, yeah, Glassnode. What are they seeing?
Well, their analysis, according to the source, suggests there are key signals popping up on the Bitcoin network itself. Signals that might point towards conditions building for, well, they use the phrase explosive surge in Bitcoin's price later on.
Explosive surge. That's strong language, especially from data analysts like Glassnode. What kind of on-chain stuff usually points towards something like that?
Typically, they're looking at the raw blockchain activity. How much supply is moving? Is it going into long-term storage? What are different groups of investors doing? Are coins being held for longer? That sort of thing.
Mm-hmm.
The source didn't list the exact metrics this time, but when Glassnode talks about potential explosive moves, it usually implies they're seeing fundamental supply and demand shifts happening under the surface, like maybe a supply squeeze is building or accumulation by long-term holders is really picking up those structural things.
Got it. So the network data itself suggests the groundwork might be being laid. And kind of connecting nicely with that forward look, another source brought up comments from someone in traditional finance who's now big in crypto, Matt Hugin, the Bitwise CIO.
Oh yeah, the interview from Juneteenth.
Right. He was saying corporate interest in Bitcoin is really just getting started.
Yeah.
And it's growing.
Yes, and his reasoning was interesting. He thinks companies are starting to look harder at Bitcoin because just holding tons of cash in low-yield accounts isn't cutting it anymore, with inflation, or just missing out on potential returns.
So the idea is that corporations might start using Bitcoin as part of their treasury management.
That's the implication. It suggests a whole new wave of potential demand could be coming, not just from retail or the usual crypto funds, but from mainstream corporate balance sheets. Another potential upward pressure point.
Okay, so this is where it gets really interesting, like you said earlier. You've got the on-chain data from Glassnode hinting that the technical conditions, the network conditions, might be brewing for a big move.
Right.
And then you have commentary from someone like Hugin talking about growing fundamental demand from a new source, corporations.
Exactly. It's that potential convergence.
Yeah.
The technical setup meeting potential new fundamental drivers. That's what makes the outlook for Bitcoin, according to these sources, still seem compelling, even amidst a daily dip driven by other factors.
It really underlines that point about looking beyond just the daily price wiggles. The underlying currents might be moving differently.
Precisely. Short-term noise versus longer-term signals.
Okay. And speaking of looking beyond the big two, let's widen the lens a bit to the altcoin market. One source directly asked that question a lot of people are probably thinking. Is altcoin season 2025 maybe, just maybe, around the corner?
Yeah, that's always a question, isn't it? They mentioned using the altcoin season index for that.
Right. Explain that index quickly. How does it work?
It's basically a tool that tracks how many of the top altcoins are outperforming Bitcoin over a set period, usually 90 days. When a high percentage, like maybe 75% or more, are doing better than Bitcoin, it's generally considered altcoin season. It suggests money is flowing more broadly into the riskier end of the market.
And what did the index suggest this time, according to the source?
It noted that key indicators within that index are starting to signal a potential breakout for alts relative to Bitcoin. Doesn't mean it's guaranteed or happening tomorrow, but the conditions measured are looking more favorable for altcoins, on average, to potentially outperform Bitcoin soon.
Okay, so that's one macro indicator for the alt space. And we also saw some specific news nuggets about individual altcoins in these sources, didn't we? Which kind of backs up the idea of activity bubbling up.
We did. One source made a point of highlighting BlockDAG, mentioned it raised a lot of money, like $298 million reported.
Wow, that's significant funding.
Yeah, and it noted its current price, 0.001, and the source's own projection of a potential, get this, 2,678% ROI.
Whoa. Okay, obviously high potential, high risk, but that kind of funding shows capital is flowing into newer projects still.
Absolutely. And that same source also flagged Stellar, XLM, and Avalanche, AVAX, saying their price action and outlook are in focus, meaning people are watching them closely right now.
Okay. And then another source gave us a deeper look into one specific project's developments, HELLO Labs.
Right. They're apparently doing some major upgrades to their token economy, introducing something called a burn and earn model for their HELLO Club.
A burn and earn model. What's the thinking behind that?
It's designed to be deflationary. So when users participate or earn, some tokens also get burned or removed from circulation.
Ah, so it rewards users while also reducing the total supply.
Exactly. The idea is to potentially increase the token's value over time by shrinking the supply while encouraging use. They're also adding a multi-chain bridge for their HELLO token, making it easier to use across different blockchains.
Which boosts its utility.
Right. And these kinds of specific upgrades and innovations happening at the project level, they feed into that broader potential altcoin season narrative.
Right.
It shows there's actual building going on.
Okay, let's try and tie all these threads together then. It's quite a mix. We started with the overall market dipping today, maybe dragged down by traditional finance jitters. But then, almost contradicting that, we saw really strong specific inflows into Ethereum ETFs, $240 million, suggesting targeted institutional buying there.
Yep.
Then, shifting to Bitcoin, we have on-chain signals from Glassnode hinting at conditions for a potential explosive surge, backed up by commentary about new corporate demand potentially coming online.
Underlying strength signals, yeah.
And finally, zooming out, we see indicators like the altcoin season index flashing potential yellow, maybe green soon, supported by news of big funding rounds for projects like BlockDAG and significant tokenomics upgrades for others like HELLO Labs.
It really shows that looking at just the total market cap number gives you, well, a very incomplete story. It might be down overall today, but beneath that, you've got these different currents. Macro fears hitting sentiment, but targeted institutional flows going into ETH, potential future catalysts brewing for Bitcoin, and signs of life, both from indicators and project activity in the altcoin space.
It's complex, isn't it? Not just one simple up or down trend across the board.
Far from it. Different assets, different segments. They have their own drivers acting simultaneously, sometimes pushing in different directions.
And understanding that complexity, that layered reality, is really why gigging into sources like this is so valuable for you, the listener. Seeing the market cap dipped tells you what happened today.
Right.
But seeing why it might have dipped, partly macro factors and where money was still flowing strongly, ETFs, and what the data suggests for the future of key players like Bitcoin and what's happening in the broader alt market, that gives you a much richer, more useful perspective.
Helps you cut through the day-to-day noise, for sure. See the bigger picture, or rather the multiple pictures.
It's about appreciating that nuance, like you said, the different engines running this thing.
Couldn't agree more.
So just to recap the key takeaways quickly, we saw that market dip potentially linked to traditional finance, the standout $240 flow into ETH ETFs, those glassnode signals and corporate interest whispers around Bitcoin's future, and the hints of a possible altcoin season backed by things like BlockDAG's funding and HELLO Labs token upgrades.
Yeah, looking at all those pieces together drawn from these different sources gives a much clearer map than just one headline ever could.
Definitely. So here's maybe a final thought for you to chew on as we wrap this deep dive. We've got this really interesting mix, right? A market dip influenced by outside forces, but simultaneously, strong targeted buying in assets like ETH ETFs, plus these positive forward-looking signals for Bitcoin and maybe for altcoins more broadly. Given all that, how does this blend of information maybe shift your perspective on where things stand right now and where the possibilities might lie in the crypto space moving forward?